Good morning, ladies and gentlemen. This is Butch Shorak. It's Options University. It's Monday, November 5th, 2012, one day before Election Day, and this is Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Looking at the SPX last week, we saw that we basically went nowhere, and we did have some decent numbers coming out of economic announcements. Basically, it took place at the end of the week. Jobless claims basically came in better than was expected. And let me set up the highlighter here. There we go. Good. And so, but notice that every week, in spite of the fact of what's reported the week before, they are always downgraded the next week when they put in their corrections. So jobless claims look good. We had pending home sales were fine. GDP came in better than expected. Consumer sentiment was not bad. Everything looked good for the week. Now, what do we got coming next week as far as economic announcements? Let's take a look at the week to come. And as we look at market forecast, we see that Monday morning, 10 o'clock, we got ISM, non-manufacturing index. Certainly hasn't been known to move the market. Absolutely nothing on Tuesday. Nothing much on Wednesday. Come to Thursday, jobless claims at 8:30 in the morning, which we have every single Thursday. And then Friday, we have a more interesting day as we have consumer sentiment coming out just before the 10 o'clock time. We got import and export prices at 8:30, and we got wholesale trade coming in at 10 o'clock. So most of the good news is going to, or most of the news is going to come in on Thursday and Friday. But then there's this day. Let's put a star there. It's called Election Day, and we fully can expect that this is a day that absolutely could end up moving the market. So what is it that we're looking at? What is it that we can expect out of the presidential predictor? And so let's take a look at the SPX and see exactly what's been happening as we look at the SPX chart. And we see that if we look back over the last 3 months, we definitely had an uptrend until we got to October. And then notice what happened in October. We had a change take place due to presidential debates, due to some reality checking. And we see that what happened was we started going sideways to down. Well, actually, we're in a sideways trend with a down cycle in that sideways trend. Now, when the incumbent is elected, 80% of the time the market will go up in the 3-month period prior to the election. Now, what we're seeing this October is where the market is telling us that there's an excellent chance that Romney could win. If we look at the polls, that actually turns out to be about a flat, even toss-up is who's going to get elected. So Tuesday will be an interesting day for the market and certainly could have an effect on the market after it happens. Personal opinion is that we could end up with a little bit of a knee-jerk reaction, but you know what? The corporation's been doing a great job of running their businesses, and what we will see is we will see corporations that will react to the issue of who the new president is, and they will react differently. One might create growth, one might create pulling back in some of the money and not expanding their labor force, not expanding their expenditures, not looking at more research and development. And the market will tell us what this is going to be as we look at the net result out of the market. See that we closed the week at 1414. We had a bounce up on Thursday with the good news out of the employment numbers, out of the housing numbers. And then what happened is Friday we gave it all back. Went back down to almost the low that we had on Thursday. Overall for the week was a shortened week, only 3 days in the week, which hasn't happened very many times throughout history because of the Hurricane Sandy. But ultimately, if we go back to the last 6 trading days, where are we going? We're going sideways, waiting for the election, waiting to make a decision on who is going to be the next president of the United States and who's going to run the regime that the presidential candidate can actually have a great influence on the overall economy. All right, looking at it closer, we see that there was no market on Monday. There was no market on Tuesday. Looking at the S&P, you see that we're close to getting across here. We're sitting on support. at 1406. And we'll see whether we're going to get a bounce. We'll know more on Wednesday morning, Wednesday afternoon to see which way this market intends to go. S&P spending time above the 200-day moving average, and last week was a week that basically went nowhere, much like what our expectations were for the market during this week. Looking at the Dow, we see a very similar situation, closer to the 200-day moving average, again going sideways, going nowhere, and waiting for that all-important election to take place. Looking at the NASDAQ, we see just a little bit different picture as we saw a little more weakness in the NASDAQ. It did kind of go sideways, and then look at that gap up on Friday, and then big pullback all the way back down to that 200-day moving average. And notice we've spent some time below the 200-day moving average on the NASDAQ. Will the NASDAQ lead us up? Will the tech stocks lead us up? We'll see what happens with the election. It is very, very important to us. Looking at the Russell 2000, we see a very similar situation, except look at that outside day. A classic look as the Russell looks like it's going lower. But remember, news overpowers everything. Looking at the indexes for the week, we see that very little change in the indexes. Minus 0.1, minus 0.2, up 0.2, up 0.1. Looking at the Dow, the NASDAQ, the S&P, and the Russell. So as we see, basically a flat week going basically nowhere. And we see that for the year, we're still up for the year as we had a great 3 months, 4 months run from the summer. And we see we rallied right into this election until we got to the month of October. And then all of a sudden, market went from going in this direction to going in this direction, going sideways, which would be an indication that Romney could be the man. Truth of the matter is, it's hard to say who's going to win this election, but we see that the NASDAQ up 14% for the year, S&P up 12%, Dow up 7%, and Russell 2000 up 10% as we're in that sideways trending market. Haven't seen much fear in the market. As we look at the VIX, we see that it's spending its time between the 20 and the 15, with a bit of a rise on Friday as the market pulled back, but still just around the midpoint on what would be our normal range of the VIX, and we haven't seen any great surge in the month of October out of the VIX, but we certainly could have one after the election. Be careful of this time for you short-term traders, as it definitely provides some added risk to the market. Tuesday is the day. Next, taking a look at the bond market, we see that in spite of all that was going on with the stock market last week going sideways, we've had a little volatility in the bond market. Notice we're in a down cycle, and this we talked about as a potential trade with us getting lower lows and lower highs in the bond market, as the market basically is pulling back and has been in a pullback since August. Now let's take a look at, that was TLT, by the way, the ETF we looked at for our bonds. Next we're going to take a look at the financials, and we see that the financials up in a nice little uptrend and showing more strength than the S&P. As we see, we're getting higher highs, higher lows as this market just keeps chugging along. Very favorable results out of the QE3 for the financial markets. And this in itself could lead the market up as if the market feels good about our new president. Next, let's look at oil, see what happens to oil, the monetary funds, which is basically, I call it a monetary fund because it is such an international way to look at monetary creation as far as international trade. We see that oil, where's it going? Nowhere. Going nowhere fast and very far away from that previous high that it had earlier in the summer. Next, let's take a look at that safe haven, that sector which we call gold. And looking at gold, we see that big pullback on Friday. So as the market went down, so did gold. Interesting. Where is that inverse relationship? And we see what? It did it on pretty decent volume as we see it pull back. Long way from that $1,800 mark when it was up at that level on the GLD, which is our gold ETF. All right, let's take a look at see what kind of volume we had on the SPY on Friday as we had this pullback. Was it something that was convincing that we were going to pull back a lot further? Well, you see, we had a little bit higher than average volume, but not much, as we had this pullback, giving back everything that we gained on Thursday in this trade shortened week, which seldom happens. So it was an interesting week, and now what we're looking at is a week to come. Again, big major news. It's an election, and it will affect the market more than likely. So those of you that are gold members, stick around. We'll look at our stocks to watch. For those of you that are not and would like to see more free videos, go to www.optionsuniversity.com/free gold. And with that, this is Butch Shorek. This is Market Forecast. We're talking about the first week in October. The first week in November. And this is Options University. Thank you for being here, folks. It is our privilege to help you with Market Forecast. And to our gold members, welcome back as we take a look at the market forecast. And we see that here we are sitting right at 1414 where we closed on Friday afternoon. Expectations for Monday is that we're going to go nowhere. And expectations for you short-term traders is be careful of Tuesday, as we'll wait and see what happens with our presidential election. I know we've been talking about this for quite some time. And so we've had limited earnings coming out of the market. We've got revenues forecast not looking all that great out of the market, and the market's still sitting very near some of the highs that we've had for the year. What effect will the presidential election have? That is what we will be watching, our technical analysis, to see if the market returns to that of where technical analysis becomes part of the predictability for what the market's doing at the moment. No predictability in the market because we don't know how it's going to react to the election. Notice that when the incumbent does get elected, and there's expectations the incumbent is going to get elected, we find 3 months from August going forward into the election in November that the market keeps right on climbing. We saw changes take place in that expectation in October. Market flattened out. And while we are in what should be the 3 biggest months of the year, November, December, and January, we're not seeing any indication that that's taking place as we're going sideways as we've gone through October and into November. All right, with that thought in mind, let's take a look at Amazon, see what Amazon's doing. Amazon going no place. Wait till after the election to determine whether you want any new short-term positions in this. As the market goes, as NASDAQ goes, so goes Apple. Or should one say, as Apple goes, so goes the NASDAQ. Well, we've got earnings out that came out in Apple. Let's take a look and see what the stock's doing. As drop below that 200-day moving average, down to 576.80. Waiting for that strike to end in China. And we see Apple pulling back. When will they decide that this is a buying opportunity in Apple? Next, taking a look at AutoZone, we see that it's run and it just keeps right on running, going to newer highs. As we saw that when the earnings came out, it was well received, and this stock has, in spite of some of the mobility with the overall market, some of the volatility with the overall market, stocks heading up. A bit away from the moving average now as we look at it, but we see the 30 days above the 200, 50s moving up, the 200 sitting right about there. This looks like a stronger than overall market stock. Wait for that pullback, and then one might consider going long or bullish on AutoZone. Next, looking at CMG, we see that CMG has had a bit of a move, looking for this to close and close the gap that's sitting right in here, and we see that it just keeps on heading up. Friday had a bit of a pullback. Look at the relative strength that this stock showed, as we see that this stock is making its move, trying to close that gap. Next, let's take a look at Google. Google earnings have already come out. We saw that they were not well received. Sold off with a great deal of volume as it pulled back. Hasn't gone any place since then. Trading above the 200-day moving average, but basically going sideways at the overall market, and won't make its big move until maybe the market moves up with greater vigor. Green Mountain Coffee. Earnings coming up shortly in that. as we see that Green Mountain Coffee is not really going anywhere. Just been trading sideways for months. And so we see that the market's kind of leveled off, and many of these stocks are leveling off with it. ISRG showing good relative strength, the overall market. Earnings well respected this quarter and well received on Wall Street. This is a stock that you can, on pullbacks, look at for bullish positions in ISRG. Not a recommendation, but certainly technically something that we see in the charts. Next, take a look at MasterCard, and we see that MasterCard came down, hit the 50-day moving average. We were looking for that to bounce. It did. We had a buy signal back earlier in the week, and we see that this thing is headed up. Earnings have taken place. MasterCard looking good. One of those stocks favored by QE3. Next, let's take a look at McDonald's, our food giant and magnate. And we see, just pulling down. So, on bounces on this stock, what are we looking for? An entry to the downside. So watch for a bounce on McDonald's and take advantage of the weakness in this stock, as earnings were not well received with volume and a gap down. All right, Nike. See what Nike's doing. And we see, wow, Nike got down to that lower level right there, and then it bounced out with much vigor, headed for this area right in here, 97, 98. If we start seeing lower highs and lower lows, look for a position in this rolling stock that tends to be going sideways, sideways, sideways. Finally, let's take a look at Priceline. Looking at Priceline, we see that earnings with volume, gap up, big move. Notice big gap up, and then pulled back for the entire day and closed very near the low of the day. Does this want to close the gap? That's a huge gap, as we see closed at 634, closed the previous day at 590. Quite a gap up out of Priceline. Let's kind of watch for confirmation of the upside for our next move on Priceline. And finally, last but not least, let's take a look at WW Grainger, trading within its range. Certainly a candidate one might look at for iron condors, boom, boom, and boom, boom, as we see it trading within its range, somewhere near the middle of its range. Nice stock well received, and we'll see where it heads, but it basically doesn't look like it's going anywhere. Trading between this 197.50 and basically up there around 215. So take a look at some of your strategies for a stock like that that's kind of range bound. So with that, we got a week that's coming. We got a huge announcement coming this week with the new President of the United States. Make sure you get out there and vote. Vote for the choice that you want in there. And then what we'll do is learn to work with them. We don't care whether the market goes up, down, or sideways. It's our job to make money no matter which way it goes. And this is Butch Shorak. It is Option University. It's Monday, and it isn't October 29th anymore. It is that month of November 5th, and we're one day away from Election Day. God bless America. Thank you, folks.